Here is a summary of Skyworks 2025 Q4 earnings call, designed for clear and concise delivery. Good afternoon, everyone. This is a summary of Skyworks' fourth fiscal quarter 2025 earnings call. The call featured remarks from CEO Phil Brace and CFO Philip Carter. Financial highlights for fiscal Q4 2025. Revenue. Skyworks reported $1.1 billion in revenue, exceeding the high end of their guidance. Earnings per share, EPS non-GAAP diluted EPS came in at $1.76. Gross margin. The gross margin was 46.5%. Full-year free cash flow. For the full fiscal year 2025, Skyworks generated $1.1 billion in free cash flow, representing a robust 27% free cash flow margin. Balance sheet. The company ended the quarter with $1.4 billion in cash and investments and $1 billion in debt, indicating a strong financial position. Key business segment performance. Mobile. This segment showed significant strength, with revenue up 21% sequentially and 7% year-over-year. This outperformance was attributed to strong sell-through and a richer product mix at their top customer, alongside continued growth in the Android market. The company sees ongoing opportunities in mobile driven by internal modem adoption, AI functionality, and increasing RF complexity. Broad markets. This segment delivered another solid quarter, demonstrating broad-based demand across Edge IoT, automotive, and data center. Edge IoT. Wi-Fi 7 adoption is accelerating, with continued strong adoption anticipated into fiscal 26. They are also developing next-generation Wi-Fi 8 programs. Automotive. Design activity remains robust, with the business exiting fiscal 25 at a new record run rate, surpassing the previous high in fiscal 23. A strong pipeline of design wins across various automotive systems is expected for fiscal 26. Data center infrastructure. Activity is rebounding as customer inventories normalize, with favorable trends expected to continue into fiscal 26, supported by increasing design wins for next-generation 800G platforms. The broad market segment has become a more balanced and durable growth engine, now approximately a $1.5 billion business, with consistent positive momentum and margins above the corporate average. Management's outlook and forecast for fiscal Q1 2026. Revenue. Skyworks expects revenue for the first quarter of fiscal 26 to be between $975 million and $1.025 billion. Mobile outlook. The company anticipates a sequential decline in mobile revenue in the low to mid-teens. Broad markets outlook. Broad markets are projected to be up slightly sequentially, representing 39% of sales, and are expected to grow in the mid to high single digits year-over-year. Gross margin. Projected to be approximately 46% to 47%. Operating expenses. Expected to be between $230 million and $240 million, reflecting continued investment in R&D alongside disciplined spending. EPS. At the midpoint of the revenue outlook, $1 billion, diluted EPS is expected to be approximately $1.40. Significant risk factors. Customer concentration. A significant portion of revenue, approximately 67% in Q4, comes from their largest customer, making them susceptible to that customer's performance and decisions. Android market dynamics. While showing growth, the Android market still presents challenges, particularly in lower-end commoditized offerings. Competition. The RF industry remains highly competitive. Geopolitical and macroeconomic factors. While not explicitly detailed as risks in the prepared remarks, these are inherent to the semiconductor industry and can impact demand and supply chains. Highlights. Strong execution. 3 consecutive quarters of exceeding revenue and EPS expectations. Corvo combination. The announced agreement to combine with Qorvo is described as transformative, promising increased scale, diversification, and a broader product portfolio. Mobile outperformance, exceeding expectations in the mobile segment due to strong units and a favorable product mix. Broad markets growth, consistent growth and positive momentum in broad markets, evolving into a significant and durable revenue driver. Leadership strengthened, key executive appointments, including a new CFO, to position the company for future growth. Cost structure improvement, consolidation of facilities to enhance long-term cost structure and gross margins. Lowlights, sequential decline in mobile. The forecast for Q1 fiscal 26 indicates a sequential decline in the mobile segment. Free cash flow expectation. While still solid, free cash flow is expected to be lower in fiscal 26 compared to fiscal 25, due to a lower expected revenue base and more normalized working capital trends. Customer concentration remains a persistent factor impacting the business. Most important statements from management. CEO Phil Brace, on the Qorvo combination, described it as a transformative deal that will add meaningful scale, diversification, and a broader, highly complementary technology and product portfolio. He believes it addresses strategic and financial challenges and will reduce customer concentration. On mobile performance, highlighted that sales volumes have been better than anticipated, with unit and mix advantages contributing to their outperformance. On broad markets, stated that it has evolved into a more balanced and durable growth engine, now an approximately $1.5 billion business with positive momentum. On leadership, expressed confidence in the current leadership team, stating, "I feel great about the leadership team that I have in place now, and I'm not anticipating any changes." CFO Philip Carter, on Q1 fiscal 26 outlook, provided specific guidance for revenue, mobile, and broad markets, alongside gross margin and EPS expectations. On free cash flow for fiscal 26, noted that free cash flow is expected to be solid in fiscal 26 but below fiscal 25, citing a lower expected revenue base and more normalized working capital trends. On working capital, indicated that while they benefited from inventory burn down in fiscal 25, they anticipate some inventory build as we get near the end of the year in fiscal 26. In summary, Skyworks delivered a strong Q4 fiscal 2025, exceeding expectations, particularly in mobile and broad markets. The company is well positioned for continued growth, underscored by strategic initiatives like the Qorvo combination. While future guidance indicates some sequential softening in mobile, the long-term outlook for both mobile and broad markets remains positive, driven by technological advancements and expanding market reach.